It's been a red week for Australian shares. The Australian stock market fell every day last week, and it hasn't looked too strong this week either. So hi there everyone, welcome to the Trader Circle Weekly Market Update. Today is Tuesday, the 25th of February 2025, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. The big topic of discussion this week is the Australian banks. They've rallied very strongly for the past 18 months, really since about October, November 2023. Many of them have gone up north of 30%, 40%. However, the reality sort of seemed to have set in last week, with the banks sort of showing they're not earning any more than they did 2 years ago. So why all the share price gains? They've become the most expensive banks of the developed world, but the numbers don't really justify that when you look at the financial results. No surprise then that we saw some strong selling. NAB fell about 17% from its peak. We saw very large movements in Westpac and ANZ, and even the seemingly untouchable CBA saw a big sell-off. Now, is this sell-off over? Is it going to continue? That's very hard to say for sure. It is likely that we'll probably see a little bit of a rebound in the short term. They do look quite a bit overdone to the downside after such a big drop last week. However, moving forwards, I don't think we're going to see such extreme bullishness as they showed in November and January. And I think there's a chance that over a more medium to longer term period, we do see the valuations start to normalize. And that means a big sort of sell down from here. I think it really does go to show, that they have been in perhaps a bit of a bubble. Now, I don't think the bubble is deflated, and I don't think it means that that bubble is not going to re-emerge either. But it does sort of go to show that the old adage remains true. In the short term, the market is a voting machine, and you can get caught up in optimism and sentiment, but in the long run, you will see reality start to set in. And I think that the results really sort of showed that, and the price action sort of showed that across the past week. The other thing that's worth mentioning, and something that Michael Corneps really highlighted in our podcast yesterday, and you can see it on our YouTube channel, is the banks have also become riskier. Now, obviously, we love to think of our banks as very well capitalized and very safe, very secure, but the risk requirements of the banks have actually, in some ways, been reduced a bit, and we've seen bank leverage in Australia start to increase as a result. Now that can make the banks look, more profitable, or like they're generating greater returns, and it certainly has done that. But it also means that if there is a crisis or an issue, they've got less buffer to absorb that crisis. And like I said, go and watch that podcast, hear a bit more of an in-depth take, see some of the slides Mike's put up, and see what I'm talking about. That could be another reason, another cause for concern with the banks. But regardless, I think it's just that the valuations are sky high, and at some point they were going to start to normalize. This could be the start of that normalization process, and that's going to occur over a long period of time, not over a week of selling. The other thing to talk about is tariffs. Markets seem to believe they were out of the woods from the tariffs across the sort of middle of February. But Trump has resurrected that word. He's reminded everyone that the Mexico and Canada tariffs were only delayed, and that he's still planning to implement them in about a week's time. He's also said that the reciprocal tariffs are still on the table. They're still calculating how much they're going to charge everyone, but those are also going to come out in about a month's time or so. He's said he's looking at tariffs into all sorts of products that they're importing, and I for one am I'm probably going to believe him that they're going to implement these tariffs. That is not a good thing for stocks, not a good thing for shares. It's not a good thing for economies, the US economy, or international economies. Not a good thing for the Australian economy. Even if we are able to somehow escape these tariffs, Trump doesn't place tariffs on us. We sell most of our exports to non-US countries that then use some of those exports to sell to the US. So we sell iron ore to China, we sell raw materials to China and other parts of the world. And if Trump does place tariffs on those other countries, it in turn will affect us in a sort of secondary or tertiary way. So I don't think the tariffs are good for us. We've seen weakness in the Australian material stocks over the past couple of days. That could be a factor of the tariff announcements. We did see a bit of selling in US markets overnight, probably also a factor of the tariff announcements. And, the US market leads our own market as well. So the tariff news isn't good. Markets have had a fairly short-term memory for the past 18 months. So as long as there's no further announcements in the near term, I do think we could see a little bit of a bounce back. But once the tariffs are implemented, I don't think it's going to be good news. Finally, the big event this week is the NVIDIA earnings report. US shares are in bubble territory, and they've been able to inflate that bubble on the hope that AI is going to drive massive earnings gains for every sort of company on the market. I really think that NVIDIA's report will basically be a little bit of a sort of harbinger of what's to come in terms of the AI earnings growth story for all the stock market. And so if we do see really, really strong demand for NVIDIA GPUs, we're going to see analysts say, oh, that's a good sign that AI is going to increase everyone's earnings. If we see less than expected demand and NVIDIA sells off, we might start to see those earnings forecasts downgraded. Like I said, it's not just AI-related stocks, anything from supermarkets to material stocks to anything out there. Analysts are saying that earnings are going to increase with AI, and I do think there's a bit of a risk here that we see those forward earnings forecasts downgraded if NVIDIA doesn't have a good report. Regardless, though, it does seem like the demand remains strong, so anything could happen after this report. It is a big one to watch. It's going to occur on Thursday morning Australian time after US markets close, but before our market opens on Thursday. And we'll have to be looking at the US futures, see how they trade in the aftermarket Wednesday session for the US market, and to see how that affects our market on Thursday. So let's have a quick look at the charts for this week, guys. This is the XJO, the top 200 Australian shares, and we can see that it's fallen back to trend after a pretty severe red week last week. I do think that there's every chance we hold this trend line and bounce up a little bit in the short term. And if we do bounce, I'd be looking to return to about 83.70, 83.50, right around a previous peak, previous all-time high, right around the 50-day moving average. The reason I say that is where we have had short, sharp bursts down in recent history, we've brought them back up pretty quickly. Those short, sharp moves down, they're often people taking short positions, and when those shorters close those positions, it pushes the market right back up. Similarly, after the push down, you often get a bit of bargain hunting, a bit of bottom feeding, and that also pushes the market back up. Finally, we're still seeing huge liquidity from around the world. The US government deficit is 7% of their GDP. And that is basically money printing coming from the US government. That's got to flow somewhere. It's been flowing into gold, flowing into crypto, and it's definitely been flowing into share markets as well. And that tap is still turned on. And so I do think there's a chance we see a little bit of a pushback up in the short term. But after that, I really think that there's a chance we see a much more subdued market in the next few months than we have seen for the past 6 months. So looking at the US market, and this is the US S&P 500. It's also fallen back towards its longer-term uptrend line. Maybe there's a little bit more in it. Maybe we'll see it drop back off towards sort of 59.50. But again, they are starting to test that uptrend line. They haven't seen anywhere the size of selling that we have. There's every chance they do drop off a little bit further. To me, if they do break this trend line, the first target would be about 58.50. And to be honest, they should probably do a lot more than that. However, like I said with the Australian market, spikes down have been bought back up in this market, and that is a real possibility as well. I think what the US market does from here will come down to that NVIDIA report on Wednesday night. So I expect a small session tonight, and then perhaps a few stabilization sessions before either a bounce back up towards their all-time high or a break lower towards 58.50. So I will wrap it up there for this week, guys. Like I said, it's been a pretty red week, a bit of reality setting in on the market. If you guys enjoyed this video, please give us some love, click the like button, click subscribe, and we'll see you guys next time.